Hello everyone, welcome to today's stock market update. Welcome to Stocker Team, the investors channel. Before we go ahead, let me just make a quick disclaimer. Every information shared on this channel is for information and education purpose only. So do your due diligence or consult your financial advisor before making any decision. On that note, thank you for joining us on today's episode of the market update. Today, the 10th of April 2025. If you haven't subscribed to our channel, subscribe, put on a notification bell so that you don't miss any update. Also, give this video a like so that more people can actually get to see this video, because it's going to be very, very beneficial for them and their investment journey. Also, join us on X today. We have a special space session. The global stock market update will be happening as from today. Also on TikTok, you can see us, you can join us as Stocker Team, and also on Instagram as Stocker Team Live. So today I'm going to actually just make a few comments on what happened yesterday. Yesterday was very historic. I think the market was so bullish, so enthusiastic that it actually set a record. That was actually one of the highest move for the S&P, the Nasdaq, and also the Dow, almost in the last 3 years or so. But actually, we knew what happened. The US has now rescinded the reciprocal tariff, and the negotiation will start for the next 90 days with the EU and other countries except China. And that's the topic I want to actually look at today, the angle I'm going to look at today. What exactly is the market still waiting for? So as of today, there's a healthy pullback from where the market actually ran to yesterday. The market is waiting for something very, very important. China is not yet actually on board to start negotiating with the US. And so, what exactly is China waiting for? Who exactly is going to contact who, and at what time? So that confirmation that the US and China is going to actually be talking and also settling this dispute is very, very key for the next phase of the bull run. And not necessarily bull run, but I will call it the recovery. And perhaps one of the most historic recovery in the history of Wall Street, and also by extension the global stock market. So here is what I think, and perhaps you might disagree with me, you might agree with me. Do your due diligence, monitor the market yourself, do your own analysis to actually see where you actually think the market will go and what you should be doing as an investor. So join me. So from what I can see, at least we got the CPI for March today, and it came better than expected. Inflation actually in the US is not as powerful as the market actually thought it's going to be. The reading for February did very well. The reading for March is looking very good. So if this garment of uncertainty, if this curtain of uncertainty is now being pulled to the side, little by little, the market is going to actually have that confidence to come back real hard for the second phase of the recovery. It's not necessarily a bullish run, but a recovery, because the market was actually at its all-time high before we had this dislocation and uncertainty that is now clearing out. So I don't see a recession actually happening in the US, especially with what inflation is doing in the last couple of 2 months. Also, earnings season is now ahead. A whole lot of the companies that have actually pulled back or lost close to about 20 to 30% of their value in the last 3 weeks or so, they will be reporting. And mind you, a whole lot of this negativity were not actually factored into the whole lot of, quote and unquote, the 3 months that these companies have actually been trading for the beginning of this year. So we don't actually expect that these companies are going to do poorly. Some will still have specific problems that they have as a company, which is not necessarily tied to the market, but companies are likely to still do better. The banking sector will be, starting the kickoff of the first quarter result for 2025, and we expect that they will be actually be doing better than they did last quarter last year. Yes, they are going to actually give projection on why this uncertainty that is not yet cleared off will affect their projection, their outlook for the year. Some of them are actually more or less tamed down the optimism, but at least they are still going to be a bit more optimistic, even in the pessimism that is still, around the corner. Also, inflation, like I said, is ticking down, further down, and in the near term, perhaps the Federal Reserve might actually be cutting rates, even if it's not going to be in April. We are likely to get the first rate cut by May if April number actually does better than what the market is actually looking for. So inflation is ticking down. So as an investor, you don't necessarily want to take position after the first rate cut comes in. You want to actually position yourself when the market is still a bit more sentimental to the negative side, because the first rate cut is going to actually see perhaps maybe the third leg of the recovery. It's a healthy pullback. Like I said, before the major run, we had the first phase of the recovery when we got the confirmation that there's a pause for 90 days, at least with the EU and other countries except China. The next phase of the recovery is just what is just ahead of us. However, it is just a phone call away. We might wake up to the news tomorrow morning. We might actually get the news this evening before the market closes. However, like I said, it's just a phone call away. It only took a tweet yesterday that there's going to be a pause and a press conference yesterday for the market to do close to about 10 to 11%, especially S&P, and some people's portfolio must have done close to 10%. It only took an announcement. So if China, President Trump and President Xi Jinping of China gets to announce that they've agreed to start talking, that is going to be the next phase of the recovery, and we are likely going to see a huge runoff close to where we were before all of this uncertainty actually happened. So before my closing statement, I'm actually going to show you, a chart of the S&P 500 and the Nasdaq 100, so that we can actually put into context where we are, what has been achieved so far, and why as an investor you always want to actually have a strategy and you don't react to what's going on in the market without having your own proper strategy and plan. Come with me. So here is the chart for the S&P 500 and the Nasdaq Composite, which is the tech heavy part of Wall Street. You can see that week to date we are now up by about 2% or almost 3% on Nasdaq, and about 1% for the S&P 500. If you look at where we're coming from year to date, you could actually see that a huge runoff yesterday happened around this part. So if we are able to get the announcement that there is a phone call that has now happened, or an invitation to negotiate or to discuss, even when the tariff has not been paused, we are likely going to see at least another 5 to 6% run. Yes, it might be speculative on my part, but at least you saw what happened yesterday, because everything happening in the market now is a verdict of uncertainty. It's a verdict of unpredictability. So the market tanked 3 weeks ago or a few weeks ago, not necessarily because these companies have problems in their balance sheet or they are bankrupt or anything, but because there was a vote of no confidence on the U.S. economy, U.S. market, and also the global economy, a whole lot of investors became very worried and weary because they feel if these tariffs are allowed to stay, it is going to actually deteriorate the economy of the US, by extension the EU, and many other developing countries who actually contribute their part to the global economy. So I'll close on this note. If we are able to get the confirmation of that phone call or an agreement to start talking, or even a pause, which is even more on the optimistic side, we are likely going to see at least another yet another historic run on Wall Street, and we might actually perhaps get close to reclaiming everything that has been lost in the last few weeks or few days ago. So that's that, and I'm going to actually now still close on the strategy side of things, because as an investor, you don't want to actually predict the market. You want to have a strategy. Join me. So, like I said, my closing thought, I will still keep saying this: don't predict the market. Remain in your positions. Buy more of your positions if you have to. Don't run into different positions, because you can see that many of these stocks are cheaper than where they were 3 or 1 month ago, 3 weeks or 1 month ago. Don't predict the market. Don't try to actually time the market. Don't also short the market. Don't predict that the market is going to keep crashing, because it seems that, quote and unquote, every war actually ends on the negotiation table. This was a trade war that lasted for a few weeks or a few days, and at the end of the day, parties to any war in history, either the actual war which nobody wants or a trade war, they always end on the negotiation table, because it is now very, very much proven that this tariff war or tariffs is bad for the global economy, whether the US, China, EU, or the developing countries in Asia and Africa. Also, don't necessarily predict that the market will keep going up in the short term, because a whole lot of this uncertainty is human behavior, and you can't actually predict when that phone call is going to come in. So please keep investing, keep growing. Join us on X today. I'm going to drop the link to this video. Join us. We'll be talking about the global markets, also not just Wall Street, the global market in Europe and some parts of Africa, and where you can actually get opportunities for alpha to get much more better returns on your capital or your asset. Thank you so much for watching. Thank you for being part of this episode. Till next time, tomorrow, or when you join us today on X. Keep investing, keep growing. Take care, and bye-bye.